If you're operating or considering a short-term rental in Ontario, this video could save you $50,000+ in fines, insurance denials that could bankrupt you, and eviction nightmares that take you years to resolve. I'm Aidan Holt. I've helped dozens of people navigate Ontario's complex transactions. And in the next 15 minutes, I'm gonna be giving you the complete compliance framework that keeps you legal and profitable. I'm a licensed real estate agent in Ontario, specifically doing commercial or residential, helping tenants and landlords. If you're interested in anything, make sure to keep watching this video, and all my information will be down below if you have any further questions. Let's get straight into the video and talk about what we're actually gonna be covering in the next 10 to 15 minutes. So the 5 compliance pillars, every STR, short-term rental. STR is going to stand for short-term rental throughout this video. So these are what every short-term rental operator must have in place. And the most expensive mistakes are usually commonly repeated. So the exact protocol that keeps you protected legally and financially, and the 3 questions you need to ask yourself before even considering a short-term rental investment. Everything I'm sharing is a current as of 2026 applies specifically to Ontario. So let's dive straight in. So pillar number 1 is municipal compliance. Here's what matters. Toronto allows short-term rentals only in your principal residence, maximum of 180 days per year. Investment properties are prohibited entirely. You need a city-issued registration certificate displayed in every listing operating without it. $50,000 fines. Hamilton, Ottawa, Niagara, each has different rules, so make sure you check your specific municipality before you list. So here's your action checklist. Verify municipality allows short-term rentals at all. And 2, confirm your property type qualifies. 3, understand operating limits. And 4, obtain required licenses or registration. 5, check condo declarations if applicable. And many condos prohibit short-term rentals entirely, regardless of city rules. So do this before you buy, not after. So let's quickly talk about the second pillar, which is RTA exemption protection. RTA stands for Residential Tenancy Act, if you were unaware as well. So the exemption for the Residential Tenancy Act is your biggest legal protection. So Ontario RTAs give tenants massive rights. As you know, in Ontario, tenants have a lot of rights. These include making eviction nearly impossible, but the short-term rental guests staying under 28 days who share living space with you or the owner are exempt from the Residential Tenancy Act. That exemption is everything, and that protects you from having a short-term rental tenant with a Residential Tenancy Act rights. So an example would be a guest books for 25 days, you accept direct payment outside the platform to save fees. But if the guest refuses to leave by accepting that direct payment, you just created a landlord-tenant relationship, now RTA protected. You're looking at 6 to 12 months of eviction proceedings, $10,000 to $15,000 in legal fees, and 0 income while they're occupying your property. That $400 you saved in platform fees just cost you $20,000+. So always keep bookings under 28 days and never accept payments outside, because you may be saving a little bit of money now, but trust me, if you get that one bad person who stays longer, they're gonna be under the Residential Tenancy Act. It costs you $15,000+ and up to 6 months in court. So here's your non-negotiable protocol. All bookings through verified platforms only a maximum of 27 days with automatic checkout. No extensions that push past 28 days, no direct payments ever, no month-to-month arrangements, no exceptions. This protocol is your insurance policy. Break it once and you're exposed. The third pillar is proper insurance. Most short-term rental operators are unknowingly uninsured. Standard landlord policies have short-term rental exclusion clauses. If a guest gets injured, property damage during a party, your insurer reviews your policies, sees you're operating a short-term rental, and denies your claim. You're now personally liable for $100,000 to $200,000 in damages. So the solution to this is you need a commercial hospitality insurance that explicitly covers short-term rental operations. This can cost you anywhere from $1,200 to $2,500 annually, depending on the property value and coverage limits. That sounds expensive until you realize one denied claim could bankrupt you. Pull your insurance policy right now if it doesn't explicitly say short-term rental coverage, you're exposed. Get this now before your next booking. If any of this is helping you, remember all my information is down below. It'd mean a lot if you guys could subscribe as well for more videos like this. And I do all real estate, residential, commercial, leasing, investing, landlords, tenants, all of it. So if you need help or just have any questions, remember my information is down below or here. You can call me anytime, text or email. But let's get back into the video. So pillar number 4 is tax compliance. You must register your HST if your annual revenue exceeds $30,000. You're required to collect 13% HST on every booking and remit it quarterly. Toronto also has a 4% municipal accommodation tax. Platforms may collect this automatically, but you're ultimately responsible for keeping detailed records of all income and expenses. So the CRA is actively auditing short-term rental operations. They're cross-referencing platform data with tax returns, unreported income. You're facing back taxes plus penalties plus interest at whatever they can hit you with. They've been dozen times where people are hit with $30,000+ in tax bills for income they thought platforms were handling automatically. With an accountant who understands short-term rental taxations specifically, you should be good. Talk to your accountant and any legal professionals about this as well. So let's talk about some lease language itself. So the 5th pillar is operational protection. If you're a landlord, a generic no subletting clause doesn't protect you from unauthorized tenants. Airbnbs, you need explicit language. So an example would be tenants shall not use the property for short-term rentals, including but not limited to Airbnb and Vrbo and whatever other platforms there are. All guests must stay a minimum of 30 consecutive days with landlord's written consent. This gives you clear grounds for an N5 notice and an eviction if this is violated. So you want to make sure you screen every guest, require government ID verification, check guest ratings, set clear house rules in writing, install proper insurance, grade locks, document property condition before and after each stay. These aren't optional, they're your liability protection. And if you have a lockbox, make sure you change the lockbox and code every time before there is a new Airbnb guest. So never become dependent on a single platform. Airbnb can suspend your account for any reason. If you diversify across Airbnb, Vrbo, Booking.com, have your own direct booking system as backup. Platform commission isn't just a fee, it's insurance and distribution combined. This is also a tax write-off. So you do not want to skip this because like I was saying earlier in the video, there is a lot you can be liable for if things are skipped. Just be careful. So before you invest in any STR property, answer these 3 questions. 1, does your municipality allow short-term rentals for your intended property type? Not, I think so, or probably. Verify in writing with your municipal planning department, because there's many investors assume and they end up losing everything, or at least buying a house and what they wanted to do couldn't even work. So number 2 is, can you obtain proper commercial hospitality insurance at a reasonable cost? Call insurance providers with the exact property address before you make an offer. Some properties are uninsurable for short-term rental uses. No insurance means no operation, regardless of what municipal rules allow. Remember, sometimes you might have to put an offer on a property before you can call the insurance company. Just be careful. This is just about protecting you to the best of your ability. So number 3 is, do the numbers work with full compliance costs included, registration fees, commercial insurance, HST collection, proper locks, security, professional cleaning, platform commissions. Many properties that look profitable become money pits when you factor in the actual compliance costs. So make sure you do your research or talk to a professional who's done this before or seen this before so they can help guide you through the process. And again, if you need help with anything real estate, everything is down below. And if you found this valuable, please make sure to subscribe. So that was the 5-pillar compliance framework: municipal regulations and licensing, RTA exemption protection through proper booking protocols, commercial hospitality insurance coverage, tax registration and remit, tax registration, operational protection through proper documentation, and screening. So the reality is short-term rental investments can be incredibly profitable when done correctly, but the compliance gap between successful operators and those facing fines, lawsuits, and insurance denials come down to these fundamentals. You don't get second chances with most of these mistakes. If you're considering a short-term rental investment in Ontario or have any questions, let's talk before you make an offer, because like I said before, I help investors, short-term rentals, anyone, a guideline or checklist for short-term rentals in Ontario and help you stay protected. Link down below. There will be a link down below right near my information. And if you click it, I'll send you a free protocol that you can download for yourself. Or if you comment down below STR, like STR short-term rental, I will reply to you and I'll send you the link for that as well. If you guys or girls watching this have anything else to add to this video, please comment down below so it can help other people in Ontario with short-term rentals and help us all become financially free. And if you have any questions at all, put it down below, because someone else might have the same question and we'll be able to answer it and help you out. Or if you know the answers to some of the questions, please answer it for someone else, as it could help someone with a big decision. So hope you guys enjoyed this video. Please subscribe for more videos like this and learning more about real estate in Ontario. And I'll see you guys in the next video. Have an amazing day.